So today's question, Courtney, is what exactly is an escrow account?
Okay, Joe, we should probably clarify the difference between escrow and an escrow account because there's a massive difference. So break it down for us.
Okay, escrow is the process. I always talk to clients just about it's the stuff that happens in between that moment of offer acceptance and closing on the home. So that's the moment in time where escrow kicks in. It's where a neutral third party comes in. And that can be a title company, a law firm, an escrow company. And we'll talk about that a little bit too, and what the differences are. And they mediate the real estate deal, basically. They hold money and property in escrow. We'll talk about what that means too, because now I already heard escrow twice until the deal closes.
Yeah.
So what money are they holding in escrow? Well, when an offer is accepted, like I said, that's what kicks things off. You need to deposit earnest money for when the deal closes. And it's a good faith deposit, right, Courtney? It's like to show, I think you said like to show they're serious. And
yeah, for sure.
That money will be returned to the buyer at the end of the transaction or become part of the down payment. But if something should happen, the way I used to describe it to clients was you have different hurdles in the transaction. We've talked about the inspection. We talked about the appraisal. And if you've cleared all those hurdles and you are good to go and even done, in some cases, a final walkthrough, really the only way, and I'm not an attorney, you won't get that money back is if you just straight up get cold feet and back out of the deal. There are plenty of opportunities where the neutral third party would return that earnest money deposit back to the buyer or at the direction of both parties agreeing to what happens with the money. But anyway, back to escrow, that's what it's meant by holding the earnest money deposit in escrow. Escrow is sort of like a big blanket term of everything that happens, the stuff that happens in between offer acceptance and closing the deal.
Yeah, and you know what? This even terminology is a little bit regional because here in Texas, we don't necessarily say, oh, the house is in escrow. We say, oh, the house is under contract.
Yeah.
So once the deal closes, you now own the home. Your lender will create a new escrow account, and this contains funds for certain property expenses, okay? So expenses like property taxes and insurance. So how do funds get into the escrow account that your lender has created? Well, when you close, along with paying your down payment, you're going to typically deposit funds to cover 3 months up to a year worth of property taxes and insurance. And then moving forward, your lender will likely estimate the total annual expenses for your home, and then they will add a prorated portion of this to your monthly mortgage payment, okay? Really big thing that you need to know is most mortgage companies are not going to prorate your HOA dues. So I want to make that abundantly clear. That's usually outside of the escrow account that your lender has created. And so when the homeowners insurance bills or property tax bills come due, you don't have to necessarily worry about making a large lump sum payment for these expenses. Your lender will handle this via your escrow account, that money that they're setting aside every month, okay? Now, keep in mind, property taxes and insurance increase every year. Don't I know about that, Joe?
Yeah, I know. That's part of your gripe.
So there's a chance that you might have an escrow shortage, and that means that there's not enough funds in your escrow account to cover your payments. So in that case, you'll likely be given options to pay the balance with like a one-time payment, or they will slightly adjust your monthly mortgage payments to get you caught up on that. So,
and Courtney, also, I just want to say it can go the other way, right? Where they've escrowed too much money to pay your property taxes, and then somewhere around January and February, they're like, "Yeah, we sort of banked in escrow more than you needed to pay the property tax," which again they do automatically if you have a mortgage on your behalf usually, and then you get a check back basically for the balance.
I wish I was a part of that club, Joe. I've never been a part of that club. Now, you bring up something really good, though.
Yeah.
Because sometimes if you're buying new construction, okay, and maybe the property taxes haven't been adjusted to account for the actual home being on the property, maybe it's just taxed on the land. And so your mortgage company basically estimates what they think will be charged. You might be overpaying, okay, and you'll get the refund. But here's the deal. It all depends on when you close. So if you do get a refund and you realize that your taxes haven't caught up to the actual home that's on your property, make sure you put that money away. Do not spend that money, because you're going to have to pay it probably in the future, okay?
Yeah, I think the short version of that is if you find yourself not paying or like the property tax part still a question mark in your mind,
yes,
you should have some money squirreled away to be like, that moment's coming at some point.
1,000%. So, Joe, do you have an escrow account, by the way? I'm not trying to be all up in your business, but...
Yeah. I think any property I've owned, I've had an escrow account for sure.
So what about if someone's like, no, I don't want my mortgage company to prorate this and collect this on my behalf, and they just want to make the payments themselves. What's your take on that? Yeah,
let's talk about this in a couple of different ways where some mortgage companies, actually, I think a lot of them require it. And so maybe it is an option, and that's fine too, but sometimes you can't get a mortgage unless you agree that they're going to do this on your behalf. And if the lender doesn't require it, and if you don't want to pay the mortgage or insurance, it's sort of like what you said in your example with new construction. Just make sure that you know what that amount is that's coming. Oftentimes property taxes are done what they call in arrears, which is like basically a trailing 6-month period. So in January or by December, you're actually paying January through June taxes. But you need to know what that looks like. If you're already having to learn more about this, that means that you need to have that money ready to pay the property taxes on your own behalf. And then there's the insurance part. It reminds me of an example of high net worth individuals. Courtney, I've been hearing about this more in Florida markets just because of the increase in both insurance rates, but also in the amount of all cash transactions, where some buyers are opting out of having this paid at all, really, on property insurance, where they'd almost wait for the natural disaster event to happen on their property, flooding, wind damage, and pay that instead of paying a monthly insurance rate that, frankly, is pretty high right now. So it is that trade-off. And that's why I say high net worth investors, because if you have that damage done, depending on where your property is and the likelihood that it's going to happen, there could be a big paycheck coming to get this thing remedied versus paying an insurance company.
Absolutely. And some people are like self-insuring. That's probably a whole topic for another episode, and probably not this platform. But yes, there's a lot of different options that folks need to be mindful of. What happens, Joe, to an escrow account once your mortgage is paid off?
So after you pay off the home loan, you might have additional money left in the escrow account. So that, as we mentioned, that you would receive that as a check for the remaining balance. And then you'll start paying property taxes and home insurance yourself. Yeah.
So you're going to want to have a savings plan once you get to that point. I want to give one final tip before we wrap up, Joe. Once you pay off your loan or sell your home, okay, make sure you provide your mailing address to the mortgage company and possibly your insurance company, because that's where they will send your refund, okay, if there's any excess left. So if you don't give them your forwarding address, especially if you sold the home, then that money might be floating around somewhere and you might not be able to collect it. So definitely a quick tip for all the folks that are selling. We hope that this provides you with some clarity on what an escrow account is and what the escrow process is. We'll be back with another episode with tips to help you navigate this big world of real estate. Let us know in the comments what questions or topics you'd like us to tackle in the future. Make sure you like and subscribe our channel, because we've got a lot of great content coming up. We'll see you next time.